Hi everyone, thank you so much for joining me. Today we are going to be talking about why most traders fail when trading the stock market. My name is Kirk with Tactical Options Trading, and we make videos just like this on a consistent basis where we talk about the stock market and options trading. If you'd like to learn more, I hope you'll consider subscribing to our channel and clicking that bell so that you don't miss out on any future videos. So why do most traders fail when trading the stock market? Now, there's some pretty interesting statistics out there that talk about the failure rate of traders, and we're looking at anywhere from 90% of all traders will fail, and some say that only 3% of all traders will ever make it in this business. Now, guys, that's some pretty scary statistics, and if you're looking at this for the very first time, you're probably thinking, why in the world would I ever want to trade? Now, my goal in this video is to help you see where these pitfalls are so that you can be in that top 10% that actually are successful in trading. So let's get going and let's talk about it. But, I wanted to say the old saying that 72% of all statistics are made up on the spot could come into play here. But I do want to read you some interesting statistics. And this was come up with by some economic scientists who discovered by analyzing actual broker data, they came up with these statistics, and it's really staggering. 80% of all traders will quit within the first 2 years. 80% of all traders will quit in the first 2 years. And then among all traders, nearly 40% trade for only 1 month. 1 month. And then within 3 years, only 13% to continue to trade. And after 5 years, only 7% remain. So guys, that's a pretty staggering statistic. It just shows you that if you stick with the business for 5 years or so, you're going to be in that top 10%. And the name of the game is being able to stay in the business long enough that you can figure it out, because a lot of people they can't figure it out, or they think it's too hard. So let's go over these pitfalls so that we can talk about what you need to do in order to stay in the game. So if you look at trading like any other profession or business, usually about 9 out of 10 businesses are going to fail. And one of the top reasons that businesses fail is that they try to expand too fast. So we see that as businesses try to grow too fast, a lot of times, they'll just grow too quickly, and they'll just, spend more than they're making, and they'll end up going bankrupt. So what I want to say, guys, is the number one thing that is going to take you out of trading before anything else is position size, or trading too big. Now, when you trade too big, this is going to blow up your account faster than anything else. So, when we're looking at the market for the very first time, or we're looking at getting into the market, we're all allured initially into the markets by the thought of making a lot of money very quickly. So a lot of times what happens is that traders will begin trading too large for their account size, trying to make up quick money, and they end up losing everything. Truth is, guys, and we know this, if you've been in the business a while, trading takes time. Trading takes patience. It takes self-discipline. It takes a lot of fortitude and mental fortitude to be able to learn the things that you need to do in order to be successful. So many traders do not have that discipline, and they let trades get the best of them, and they don't let trades play out, and they don't let trades come to them, and so they start trading too large for their account, and they end up losing big, and they blow up their accounts. So I would say, guys, number one thing: position size, position size, position size. You have to trade small, trade often, so that you can stay in the game. Number two reason I would say is that people are miserably comfortable. And what do I mean by that? Well, most people don't want to make big changes if it means that they have to do a lot of hard work to change. They're excited about the prospect of changing, but soon lose the motivation to continue, and they're what I call miserably comfortable. So picture, you're at work all day, you're really tired, and now you're off work, and you come home. Now it's your time to start learning a new skill, such as trading. Well, most people are, they have good intentions and they want to learn something new, but when they come home from work, they sit on the couch, they turn on the TV, and they kind of just veg out for the rest of the night instead of taking that time to learn a new skill and so they're not, they don't hurt bad enough in life. In other words, life doesn't hurt bad enough to change, and they're not willing to put in what it takes to get the results that they're looking for. So too many people go into trading thinking that it's going to be easy and that all they have to do is click a mouse, and they mistakenly think that this is way too easy, which we all know it takes time, it takes a lot of discipline, and we have to give it the respect that it deserves. So I would say miserably comfortable is the second reason that most people will end up failing or quitting in this business. Now, third reason, and a pretty big reason, is emotions. And these emotions are called greed and fear. And greed and fear are what control the market. So, letting our emotions get in the way of our trading. Not having an exit plan, or even worse, having a plan and not following it. So how many times have you guys been in the market or been trading and you let your emotions get the best of you? If you got a trade that's really going well, and you start getting a little bit greedy, you start thinking, man, I could just get a little bit more out of this trade, and you end up holding that trade overnight or something, and then as you wake up in the next morning, something bad news came out that night, and the market gapped down, and you lost everything, and you're actually a trade that was winning is now a losing trade. Same thing, and if you're on the downside, and there's a lot of fear in the market, how many times have we looked at the candlesticks on these charts, and we got a big red candle, and we're like, man, this thing's going down forever, and we get out of the trade just at the time that the market turns around and actually goes the way we want it to, and we let our fear take control, and that emotion of fear took over and took us out of the trade. So we have to take our emotions out of these trades. And what I like to do when I'm setting up my trades is I also set out my exit points, and I let the software take me out of the trade. I don't let myself look at those charts and myself take myself out of the trade. That's dangerous, right? We have to go in with a plan, execute that plan, and if we don't execute that plan, then we're setting ourselves up for failure. And I have a little exit sign here, and I'm thinking, this is just like a fire escape. If we practice and practice and practice how to get out of a burning building, but then if the time comes and that building is burning and we don't execute that plan, we're setting ourselves up for disaster. So we have to have a plan, and we have to execute that plan. So a lot of times traders will let their losers run, and they'll cut their winners short because they don't want to take a losing trade, or they don't want to accept that losing trade, so they'll let that trade stay on longer, and they'll end up losing more money. And then when they actually have a profit, they'll take that profit off early because they don't want to lose that profit. So it doesn't take a math whiz to realize that if we're taking more losses and bigger losses than we are wins, then we're not going to be in business very long. So don't let those emotions of greed and fear take over. Number fourth reason is not staying consistent. So most people understand that in order to be successful in business, they need to be consistent. However, most people don't treat trading like a business. They treat trading like a hobby, and hobbies are expensive, right? If you guys have ever had any hobbies, you know that hobbies can cost you a lot of money if you're not careful, because we're treating it like a hobby. Now, if you're treating it like a business, and you're doing those things necessary to make your business successful and staying dialed in and focused, that's a different story. We're not treating it like a hobby. So just like losing weight, going to the gym, practicing an instrument or sport, most of us have great intentions of being consistent, but we don't have the follow through to be consistent. We lack that consistency. So, what started out as a great idea and we're all excited about it, it just doesn't happen. And, we've all made those New Year's resolutions that 2 weeks after the new year starts, well, we're back into our old routine. So we have to be consistent. And I would say that is one of the reasons most traders fail, is because they lack the consistency. They don't stay in the market. They're not aware of what's going on. They're just kind of playing the market here and there, kind of like a lottery ticket. And that could get real expensive because they're not staying up on what's going on in the market. So trading can be a lonely profession, and when we don't give someone or something, we don't have someone or something to hold us accountable, many people will just give up and quit. We have to have a trading partner or some type of a routine And so if that's getting on the market 30 minutes in the morning and getting on the market 30 minutes in the evening, we have to keep with that routine and hold ourselves accountable so that we can stay consistent in the market. So I would say that would be number 4. Number 5, I would say, I like to be a neutral trader. So, one thing is for certain, and that is that we don't know for 100% certainty which way the market will go. And there's literally hundreds and hundreds of indicators that we can put on our screen to predict market direction. But in reality, we really don't know for 100% certainty which way the market is going to trade. So how many times did you guys know for certainty which way the market was going to go? You had all these indicators on the screen, and you knew that the market was going to go up. And then you woke up, or later in the day, the market went completely against your position, and you're sitting there thinking, how could it? How could it? Everything was pointing in the right direction. Everything was bullish, and then some news came out, and we can't control the traders in the market. We can't control it. We don't even know. We can't. We don't have any idea what gives. All these indicators are on the screen, but sometimes they can be confusing. And the way I like to trade is being neutral. I like to stay neutral in the market. So, say for example, you had 10 stocks in your portfolio. I would say, maybe 5 of them be bullish, 5 of them bearish, so that they're market neutral, even though you have some directional bias on some of them. You don't want to be completely bullish on all your portfolio or completely bearish on all your portfolio, because you have one market move and your whole account is blown up and gone. So the name of the game, you guys, again, is trading small, trading often, and not putting too much at risk, and then being smart about it and keeping your portfolio managed in a neutral style position or neutral position, so that you can live to play another day if the market were to completely go against you. All right. I would also say knowledge base. Knowledge base is going to be one of the final factors of why people cannot and will not be successful in trading the market. So, we think we know enough, and we don't put in the required effort to learn what needs to be learned. We get into our little rut, we get a little strategy down, and we don't continue to learn. So if something seems too complicated at times, we tend to shy away from it. And this is where we need to push through the learning curve. So a lot of times we're learning new strategies, or we're learning something new. If it seems too complicated, we're just going to say, I don't want to learn this. This is too difficult. I can't grasp it. So they don't put in what's required in order to make, in order to pay off those big dividends. So, people have been trading for 10, 15, 20 years, and a good, smart trader will continue to learn, even if he's traded for 10, 15, 20 years. They realize they don't know everything, and they can always learn something new. So I would say, always be aware, always be learning, always be wanting to grow, and building that knowledge base. So guys, I hope this video has been very helpful. And if you enjoyed this video, I hope you'll give it a thumbs up, or comment down in that section below, or possibly share this. And again, if you're interested in these kind of videos, I hope you'll consider subscribing to our channel. My name is Kirk with Tactical Options Trading. We enjoy making these videos, and if you'd like us to make any other type of videos with questions you might have, leave it in the comment section below, and we'll make some videos on your questions. Thanks so much for joining me, you guys. Have an awesome rest of your day. We'll catch you later.